Andrew, thanks so much for your time. How would you describe this year?
Thanks for having me. It's been a tough year. For us, it's a consolidation year. We grew very nicely from our listing just on 5 years ago. We listed December 2013 at a 5 billion rand of asset value, and we grew nicely to 12.5 billion rand of assets. But with that comes increased debt, and we've decided that this year under review, it was a year to consolidate, and we see that going into the new year as well. So bringing down our loan to value, improving our costs, which came in quite nicely at under 15%, and improving the quality of our portfolio and enhancing the existing properties that we've got.
Sure. So where's the debt currently sitting at, and what is the target?
So we're at, in South Africa, at just 39% with offshore.
In millions and billions?
It's about 5 billion.
Right, okay.
Yeah. The target is 35 and below, and we are undertaking quite a few initiatives to get there.
Like?
So we have a disposal, a BE disposal of about 1.2 billion that we're working on. We've got a recycling of another billion rands worth of assets, not in our strategic nodes. What we do, our main strategy is to focus on nodes. We select nodes that we think are superior, and we invest in them, like Fourways. Fourways is our main node. It is where we're building the Fourways Mall super regional shopping center, which is going to be one of the biggest malls in Africa when we're done, and that is nearing completion. So that's getting very exciting for us.
Are you not facing questions from your shareholders about the ramping up of malls like Fourways, or when we are talking about big risks from online retailers where brick and mortar stores, are not going to be as relevant as they are right now in the future? So
absolutely. We actually look well ahead. We look at international trends, and what we've done is we've embarked on a campaign of future-proofing our retail malls. We've embraced what we call shop-attainment, which is being anchored by a concept called Kidzania, where you educate young children at the same time they have fun, but they're getting educated, and we think that is a necessity for our children in South Africa. Education is the most important thing for any economy. If you get that right, then your foundations are solid. So we're anchoring our whole concept on Kidzania. We have a 4,500 square meter bounce trampoline concept. We have miniature golf. So we are looking at that to counteract what we believe will come. It hasn't come yet into South Africa, and it probably will take quite a bit of time, but we want to be prepared for that. But what's nice about choosing strategic nodes like Fourways is that those nodes have very good densification. So the mall we're building sounds big, but for the node, it's the right size. Sure. We have the population that will feed that node, that mall. Sure. And the area that you are expanding there in Fourways, it's not open, as I do understand. When will it be open? So actually it is. So the mall, that's what made the project really interesting, because we're building and we haven't closed down the existing mall. So the existing mall is still operating, and we are building an extra 110,000 square meters around on top of that mall. Okay, so when will all of that construction be complete? Okay, so we're nearing completion. There'll be a phased opening. So towards the end of the year, we'll open up some more pockets with a big relaunch of the new mall in April next year. Okay, so Andrew, you've spoken about the retail front. Talk to me about this big tick up in vacancies over the period. What happened? So the economy, as you know, is tough. There's no hiding from it. And yeah, the vacancies have increased. We've gone from 7 to about 10. We try really hard to retain your tenants in tough economic times like this. How are you doing that? You're offering them discounts, payment holidays? How's that happening? We do look at that. So for us, we calculate the cost of having an open space and having to relet that space, what that actually is in physical rands and cents, as opposed to also helping the tenant. So if it's a strong tenant, a tenant that adds to your shopping center, you actually make a plan to help that tenant through the tough times. How are you feeling about the outlook for the South African economy and thus yourselves for the rest of the year? So we think it's going to be a tough year. We're hoping that we'll see some of the growth coming in towards the end of the year, beginning of next year, which actually coincides with the opening of our mall. So If that happens, yeah, those vacancies then actually flip itself on its head, and it becomes great potential for us.
Sure.
Because it could be easier to let, and then letting that vacant space adds to our bottom line. So
Sure.
it's not like we're sitting on 2% vacancies and there's no upside when the economy turns. We believe there's huge upside, and we're preparing ourselves for a turn in the economy.
And outlook for distribution growth?
We gave an outlook at the end of last year. We've met that distribution growth this year. We believe that'll be another comparable year coming now. So we are not looking to do any expansions like that. We are looking just to carry on bringing down our LTV, improving our existing properties.